Personal loans tend to have interest rates between 5% to 36%. Although with a high credit score, you might be able to go lower. If you have fair credit, you'll still have the opportunity to get a loan. However, the interest you should pay may be higher than average. Every lender is different, and every loan they offer is also different. From interest rates to loan terms, from flexibility to other fees, there is a lot to take in account when looking for your loan. Compare your different options smartly and pick up the right loan for your needs. Here are the Smart Investor Selects picks of personal loans for fair credit. If you can't find a suitable lender for you, you can always compare your options on our personal loan comparison tool. 1. Avant. Based in Chicago, Avant is a personal loan servicer that is a good option for those with bad credit. The minimum credit score needed to be approved at Avant is just 580. The loan servicer grants loans for the amounts of $2,000 to $35,000. Perhaps the most beneficial thing Avant offers is their easy-to-navigate mobile app. Having an app allows borrowers to pay no matter where they are and check their information in real time. They also give borrowers the option to set up autopay, which adds to the convenience factor here. Along with that, Avant has no prepayment penalties, late fee forgiveness, and they only do soft pull inquiries for their applicants too. While we love the convenience Avant offers, there are a few caveats here. First of all, they aren't available in all 50 states, and you have to wait 30 days from the time your funds are issued before they will appear in your bank account. This can be frustrating, specifically for anyone who needs their loan right away. Avant also has higher interest rates than other companies, charges administration, and origination fees. They also aren't available for business use. 2. Lending Point. The goal of Lending Point is to create frictionless access to money when and where their customer wants and need it. For those with a poor credit score, Lending Point is another solid option to look at. They offer loans to anyone with a credit score of at least 600 and require a minimum income of $20,000 per year. Their turnaround time is really quick, and most borrowers will see funds in their bank account within 24 hours. Lending Point has a flexible repayment system and doesn't charge any type of penalty fee for prepayment. As a popular choice among those with bad credit, Lending Point is a good option, but it's always important to look at the negatives before jumping on board. For example, they have higher interest rates than other companies. They give out a smaller max amount than others, and they charge a hefty late fee if you're late on your payment too. 3. OneMain Financial. OneMain Financial's personal loan program is extremely popular among those with struggling credit. Unlike the other lenders on our list, OneMain Financial doesn't have a minimum credit score in order to be approved. This lender may not be available in all 50 states, but they do have offices all over the country, so you're likely to find someone willing to help. OneMain Financial is by far the most flexible of this list, as they have several different application options, payment options, and they allow joint applicants too. Another upside to this lender is that they don't charge a prepayment penalty fee either. All funds that are approved by noon the day you apply will be released the next business day. This lender is best for those with little or bad credit, but there are a few downsides to borrowing with them. OneMain Financial charges higher interest rates, penalty fees, and they have restrictions on what you can borrow and how you use it. What are the requirements for a fair credit loan? There are some requirements that you will need to fill before you can get your loan. When you have fair or lower credit, you may need someone to sign the loan with you. Other than that, you will need to go through a more thorough application process. This is called a hard credit check. It will temporarily lower your credit score for a period, so you will only want to do one at a time. Wait until it goes back up before you fill out another application. You will also be required to have copies of certain documents with you. They may require bank statements, your W-2, pay stubs, documents relating to your other debts, and more. The lender will require you to provide them with everything they need to get an accurate idea of what your financial situation looks like. If you are unsure of what the bank, credit union, or online lender will require from you, do not hesitate to ask. They should be upfront with what they need, so you can prepare to provide them with your documents. During a study released in 2020, J.D. Power sought to measure consumer lending satisfaction. What can be learned from this study? How to build trust. One of the key takeaways from the study was that consumers need to trust their lenders. If they do not, then they will not feel very satisfied with the loans and services they receive from the company. Lenders can build trust by providing easy-to-use online tools, allowing their borrowers to interact with them whenever they need to. Plus, it allows people to make payments simply online. There are plenty of benefits to having these tools, including building trust and satisfaction. What to look for. So, if you are interested in signing up for a loan, you will likely feel more satisfied with the lender if they offer a variety of online tools for you to use. Be sure to look out for those features. Without them, consumers can become frustrated trying to interact with the lender or may feel that making payments is inconvenient. Overall, customers are the most satisfied when they can make payments through a mobile app. Lenders enjoy this feature too, as it allows them to receive their funds more reliably.